Okay. Happy Sunday. Happy Easter. What a beautiful day. What a beautiful celebration. So today, first of all, welcome to Big Happy Trading. This is Sunday, April 5th, 2026, and we were recording this right now at 3:41 Eastern Daylight Time. So the Asian market opens up in like 2 hours and 20 minutes or so. I had somebody message me and ask me about pre-market, what I do in pre-market, and I thought it would be interesting. And the reason I wasn't normally I'm not real interested because I'm an intraday trader and a scalper and short-term trader. So long-term prep is not really, I'll look at the daily, I'll look at the 4 hour, which is the chart we're on right now, and I'll look at the hourly 15 minute, 5 minute, 1 minute. Those are all my execution time frames. But to get a bias on the market, let's go to let's pop out to the daily, which I think is going to give us, um, you know, a good vision of what we need to look at. And there are so many balls in the air right now that we need to be aware of as traders. That first of all, let's look at the market, and this is from from January, the January high at 7,050. I mean, we have come down about 8% from the high. 20% would be a full market correction, which would be closer down to, I don't know, around 6,000 or something like that. So what did I say, 7044, let's say minus 20%. Yeah, we'd be down in the 5700 range with a full-blown correction, which, man, I'm not saying we're not going to go there. But what I want to do, what I block out, and I just let you know, I look at the most recent highs and lows, and I usually look at the last day or two. But I think it's significant for us to look at the low from March 30th here. That was and then you obviously we had a rip from here, but this thing dumped down to 63.50 on at 8 p.m. and then the Asian market ran that thing up to crazy town. But I digress. Let's just look at the things that are going on right now and preparing for the market. What I always do, I do mark out the highs and lows. I usually mark out the highs and lows of the previous day, and I look at the previous, and I'll usually maybe even mark out 2 days. I'm going back a few days here because the last market we had open was Thursday, was the last active market. And you can see our low on Thursday, pre-market was, 65.03, and we ran up nearly 100 points. But I want you to be aware that the market high from Thursday and the market low from the 30th, we're looking about nearly a 300 point swing. That is a humongous margin. Now, us as intraday traders, we're not going to be trading anywhere near that range, but I think it's important for you as a trader to be really careful on what you're going to do and how you're going to trade a market. Could we come all the way back into down here? I think we could. We are in a downtrend to me, and again, I speculate, I think what's going to happen, but I let the charts and the system tell me about execution. I can have a bias, but I don't let that bias dictate and control how I trade. I let the 920 EMA cross signals tell me how to trade. I look at the market. I think I can have an idea of what's going to happen. We are absolutely in a downtrend. Is this a relief rally? Yes. And looking at historical data, if you look at 2008 and 2000, every time the market dumped, people go, "Oh, we got this relief rally for a few days, and everyone thinks it's going to happen," and then it just continues in a downward trajectory. I still think we're in a downward trajectory. Let's talk about a few catalysts and items that you should be aware of. The jobs data that was released was really positive. I think 176,000 jobs were created. I think that's inflated poo-poo data. I know that 35,000 of the medical jobs were doctors that walked out, walked back in. So, I mean, the numbers are inflated on that. the big wild card stuff is what is going on. We didn't trade Friday, and now coming into Sunday, what do we think is going to happen? You got the Iran war. You've got the jobs. The Iran war is obviously negative. You've got let's see, what is? Let me move this over here. You can see oil. Let's look at oil real quick. Oil is, still as the market closed at $112, and so you can see the stock market's in a downward trajectory. Obviously, oil, since this thing started in February, right? We had to gap up when when the whole war started. This thing gapped up. It was down here at 67 and consistent. It was starting to climb because there was some tension, but then bam, we're more than double of what that is. So I only bring up oil. We have to be aware. When the market goes down, oil goes up. When the market's going up, oil goes down. I've talked. We'll do a video on counter trading, those two at another time. But this is about market prep. So here's what I think is going to happen. I'm going to give you my 2 cents. And again, this is not going to dictate how I trade the Asian market in a couple hours. But I think there's going to be a serious gap down. That's my opinion. I think with everything going on, even with some positive job data, I think the U.S. had a couple planes down and they picked up a pilot. Tensions are still running high. I don't think there's any good news that will drive us in the market. Now, that being said, as the Asian market opens, Trump has been historically dropping things on Sunday night, Monday pre-market. He does what he can to keep the market going up because that's obviously good for America and it's good for the economy. It's good for everything that he wants to continue to do. So I've been in this about 7 minutes talking about this. So let's get to what I really look at for market prep. So I look at the daily. That gives us, we are definitely, even though this is a small relief bounce for 1, 2, 3 days, I think this is just a relief bounce. This is just my opinion here. So going to the hourly, which is really, we are kind of flat. You're looking kind of at going back here to the first, which we kind of topped out here. We're kind of going all the way back to the 25th. We popped above this up here a little bit and not too much, but again, I look at the 1 hour for trends as the market is going. Looking at Thursday, we had this big pop. It's not going to give us really any good data. So what I do from a market standpoint is I think there's going to be a big gap down. Now, do we gap down? We're at 66.04. We're not going to gap down 100 points. But do we gap down, pop up, maybe reject off 60 off the high from Thursday, somewhere in this range, and then reject and go lower? There could be something like that. Or we could just rip down and just start, a cascade down to these down to the lows on Thursday. I don't really know what's going to happen, but I definitely believe on the open, and I'll do a video recording. I think there's going to be a gap down on it. That being said, it doesn't matter what I think. Okay, it's like, what's the market going to do, and that's what we want to look at. So looking at the from my trading strategy, I look at the 5, and I look for execution, and I look at the 1 minute. So these are the 2 time frames that I look at for execution. So when the market opens, this is what my charts look like. A lot of you guys have asked me what it looks like. So I've got the 1 minute on the right for execution, and I've got the 5 minute on the left. This is how I do it. And if you're looking at the 920 EMA cross, is you're getting this kind of wishy-washy stuff at the end of the market here. Fairly, decent signal here. But before that, it was a downtrend for all the way down to here. And then you had these shenanigans that popped up, and that was a 30-point move, just taking out. That was just taking out a bunch of shorts. The people who were shorting the heck out of the market, they got popped in the nose. So, again, what I think is going to happen, I think we're going to have a gap down, and then I'm going to let the market settle for 5, 10, 15, 20 minutes and kind of pick a direction and see how the 920 EMA cross shapes up. I may take some small risk and use the 1 minute for execution. I may just wait for the 5. I'm not going to be real aggressive to trade because I don't know what in the world is going to happen. Just a quick review before I log off here. We had positive jobs data that was reported after the market was not trading, so that information was not. There were no trade. It wasn't in the market, so people use them for trading. You have the negative market going on, that the war is still going, the Strait of Hormuz is still closed, oil prices are still high, Trump's posturing, making a bunch of threats, Iran's threatening back, so the tensions are extremely high. So how in the world do you think you know what's going to happen? I don't know. But here's what I can tell you is use a simple trend strategy. Now, there is going to be all kinds of shenanigans on the Asian market open, I think. So I think it's going to whipsaw back and forth. Not as much as the New York Open. And boy, what is that ride going to be like Monday morning? I mean, you better buckle up and you better buckle up hard because I think it's going to be, I think there's going to be some lunacy going on. But I think we're going to see what happens in the Asian market and the London market tonight. I'm eager to be here at the computer in a couple hours when this opens, and I'll do another video following up, but I'm going to post this video prior to the open for some of you who are looking for pre-market. Let me give you a quick summary. All I do is I mark out the highs and lows of the previous sessions, kind of give us a range. Any of the real interesting ranges, then I would look at, we've marked out the highs and the lows of the previous sessions. We looked at that March 30th low, which is 300 points from this high, nearly 300 points. So you're looking at 63.50. So that's a huge range. Now, if we started going south and more bad news came out, we could head back south down there. This is where you can get some really big trades on the trend, guys, and that's why I like a trending strategy like the 920. You get in multiple contracts, you take one at some profit targets, you move your stop inside at safe to entry, so you have a no risk trade, and then kind of let this thing run and let your winners run. You can make some big. I've had some big trades, and if we would have done that on Thursday, I believe I showed that would have been a 100-point win. I'm going to stop right here. Good luck to you. The Asian session starts in 2 hours. Happy trading, and I'll do another market update after and see if we get any kind of action on the Asian Open. Thanks. Take care, and I'll talk to you soon.